So we just started. Okay, so I welcome again everyone for another episode under Get More from Mallapuram. And the purpose is only to provide clarity so that people will have confidence in whatever the decisions which they are going to take regarding their investments, regarding their financials. Okay, and we really want to go beyond just doing an insurance advisory services. So that's the reason we are actually inviting the specialist in every area of life, who will have an impact on our future of the family and also for our investments and savings. So with this regard, let me just invite today's speaker. Okay, and let me just invite Mr. Srinivasulu garu. Okay, I'm just pinning in to the session here. I hope both of you are, all of you are able to see both myself and also Mr. Srinivasulu here in the session. If it is yes, can I see yes in the chat box? Can I see yes in the chat box, please? If you're able to see both of us. Oh, great. Great, thanks a lot. Thanks a lot. So let me just introduce Mr. Srinivasulu garu. Okay, he's a qualified chartered accountant and with over 20 years of experience, and his professional background includes like he's in senior partner in Farindra and Associates, and he's also an advisor to ProLiterature Consulting LLP, which has a team of 60 plus professionals operating from Hyderabad. And he served the large corporates as a trusted advisor in implementing solutions to improve the financial operations, cost cutting, internal controls, and improving financial close processes. And his areas of expertise includes internal audits, peer review audits, FEMA, and then income tax, and then bookkeeping services, and payroll services, and labor law compliances with GST filings and the compliances. So this is a very, very small gist about Mr. Srinivasulu garu, and I request him, sir, now the stage is all yours. And I know like people are really waiting because this is a season where we'll be looking forward to submit their tax-related investment proofs and things like that. And before that, like I just really wanted to tell everyone, there is going to be a gift which is being planned by Mr. Srinivasulu garu for all of us who are there in the in this particular webinar. But the only thing is, it will be given only to those people who will stay till the end. Okay, so keep be there on the webinar till the end, number one. And if you have any queries whenever the session is going on, we request you to please put it up in the chat box so that we'll have all the questions and we'll take up all the questions one by one. We try not to miss any of the questions. Okay, so this is about the agenda, and I request at least for this 1 hour, if you could just mute your mobiles and then focus on this, probably that could save a lot of money for you. Okay, so over to you, Mr. Srinivasulu.
Yeah, thank you, Mallapuram, for the brief introduction. It is always as so nice as you. Okay.
Oh, thank you.
It's always a pleasure to share a screen and to be a part of the speaker to explain. No, because this is a season where the most of the employees would like to know about the tax saving and the tax planning. And I think you have chosen the right time, right topic at the right time. Okay. So what we will do is we will. I think I have seen a few messages saying that they were not able to see me. Can you just check? Like they were able to see my screen.
Guys, if you are there attending this from the mobile, probably you may have to flip it to the right side. Okay. But if you are there on your system, then I think you should be able to see both of us because we have pinned both of our screens to everyone. People who are can you see people who are on the system? Are you able to see us? Like, can you see a yes in the chat box?
Yeah, I think now there are so many.
Now they are able to see. Yeah, yeah.
Okay, I think whoever, has any specific issue, then maybe they can address it.
So probably you can just put it up in the chat box. My team will be able to take it up.
Sure. So, as a topic says, the tax saving investments, because it's a tax planning that they want to do to save taxes. And and also use this savings for the future. Okay, this is what the whole agenda is. But Mr. Mallapuram, why? So, what do you think? See, before we get into, we'd like to share a presentation to all of you so that it will be more interactive with the participants. So, with your permission, we'd like to
Please, sir,
share
go
it.
ahead, sir.
Okay. Yeah. Let me share our screen.
Yes, sir.
And I have with me Mr. Nagaraj, who is present in the screen
Okay.
for the ease of navigating through the various screens.
Right.
So, yeah, so before we get into the tax saving investments topic, okay, I want each one of you to set the tone for this particular session, because any session that we attend, there should be a purpose, there should be
Correct.
an objective, right? Because at the end of the session, you should all feel that, yes, at least I got something out of this session and able to learn at least few new things and few takeaways. Okay, so what I will do right now is, okay, instead of straight away jumping into the main topic of investments, we will share a slide where we will discuss a few topics where it says, let me understand. Okay, so
Okay.
let's get into the first slide. It says, let me understand.
Okay.
Okay, each one of you, why should I understand all this particular issue? Because this will help you to understand why this session is to me. Okay, why should I attend this session and what I'm going to get out of this session. Okay, and Mr. Mallapuram, so what do you think? What is the objective of the session? What's your view?
Sir, see, I'm actually talking from the perspective of the participants. I only look at one thing. This is the time wherein all the HR people, they will cut my salary and they will pay less because there's some taxes which need to be calculated. So I only look at, like, how best can I actually save my money? Okay, and not just saving, but probably even to safeguard in a way that it will be also useful for me in the future. So this is what the health bent of mine on which I'll be looking at. And probably the next thing what I will be definitely looking at is, because there is a new regime, old regime. So there's a lot of confusion. We don't know which regime to go. So there is a lot of confusion out there. So I would certainly look forward for a kind of clarity on that. So this is the second thing. And the third thing, yeah, is there anything which probably I'm actually missing out, wherein if probably I can use it, I can save somewhat benefits for my family. So that's what I'll be looking at.
Correct, correct. So, I see over a period of my experience, there are certain myths to the individuals or the taxpayers with regard to their tax filings, which I want to clear it during this session. Okay, as you mentioned, see, everyone want to save taxes because, see, I think in our old cinema Telugu dialogue, they say that dictionary lo నాకు నచ్చంది ట్యాక్స్ అన్నట్టు మెజారిటీ పీపుల్ కూడా మనకు నచ్చని పదం ట్యాక్స్ ప్రతిసారి ట్యాక్స్
So,
అనే
yeah, just for the benefit of the people who are with other linguistics in the participants. So what he's saying, the only thing which there's a movie which says, like, in that one statement is there. It says the only thing which we don't like in the life is tax and tax. Okay, so you just continue.
So yeah, it's always people want to plan their taxes and save taxes for the better future. So now we will try to make this session very simple, interactive, and I'll touch very important points wherein each one of you will understand with regard to this topic. But before we get into the topic, so first point that I would like to discuss is the exemption versus reduction. Okay.
Okay.
See, because anybody, they think that, okay, to save taxes, I need to make investment or I need to claim deduction. But
Right.
apart from the reductions, we also have exemptions. Okay.
Okay.
What are these exemptions? See, for an employee, there is a salary structure. Salary structure, I have a basic salary and DNS allowance, but anyway, DA is not for the private sector like for the private sector employees. And there is an house rent allowance, HRA, and there is LTA, there is food coupons, okay, there are mobile bills, internet bills, okay, there are various components of the salary where I can claim exemptions under income tax. But unfortunately, in my experience, majority of the employees doesn't have these tax exemption components in their salary structure.
Oh,
As an employee, I don't have an option to choose it. Okay, because it's the organization, it's the management that chooses the salary structure. Okay, so see, I've seen majority of the companies, they keep salary structure very simple: basic salary, HRA, special allowances, or other allowances, or maybe if they have a PF, employer contribution, gratuity, that's it. But ideally, the company should have a proper salary structure wherein they can able to claim majority of the exemptions that are available in the Income Tax Act. Okay, but
okay.
Mr. Mallapuram, we are not going to cover these exemptions into this session. The reason is the targeted audience are the employees. Okay,
Okay. Yeah.
employees doesn't have an option or a discretion to claim these exemptions on their own, because it is the management or the company that has to structure their salary in such a way that, okay, they need to able to claim most of the exemptions that are available in the Income Tax Act.
So
Okay,
just to restate it, that you mean to say that the exemptions is something which has been designed as a part of the salary structure by the organization.
correct. You are
We
right.
don't have any control on that. Like as an employee, I doesn't have any control on what is the kind of structure which my company is giving it. Do you mean?
Correct. You, because so if enough of our participants representing the company, or they are HR executives or HR managers, they can very well inform this to their management that, okay, for the benefit of their employees,
Okay.
okay, we can plan a session later wherein we will talk only with regard to the exemptions and how
Okay.
to structure this, okay, for the tax efficient manner. So see, I'll tell you one example. We have so 40 lakhs salary drawn employee. Okay, we have structured a car lease program for
Okay.
the employee
Okay.
to save taxes very hugely. Okay, because most of the organizations doesn't know that there is a car lease program that can be implemented within the organization.
Okay.
Employees, they
Okay.
not buy a car, but they can lease a car and still get the tax benefit out of the car lease that they take.
Oh,
There are those items that can be planned, structured, and can be implemented into the salary structure. Okay. And again, this is a very big topic. I don't want to further get into this because major topic is only on the deductions. But I want to touch base that this is also very important for the employees to
right.
save their taxes. Okay. And then I know majority of the people who were joined, maybe 60 or 70 people, they think, why do I need to attend this session when I'm already opted for new resign? Because see, they think new regime, anyway, I'm not going to claim any deductions. And what is the advantage of attending this session? But I'll tell you during the session, even you being under a new tax regime, how can you get benefited? Okay. And Mr. Mallapuram, see, it's not always that you do investments for the tax savings, see, tuition fees, children tuition fee. Whether you get deduction or not, you have to pay for your children. Right?
Correct.
So, and suppose you have a housing loan, repayment of the housing loan is something, anyway you pay, principal portion is exempted. Okay,
Right.
employer PF, which is also a deduction, whether you like, doesn't like, it's a deduction that you will get it. Okay, what I'm trying to say is, many times the employees feel that, okay, new regime I am there, so I don't bother about the deductions at all. Okay, but it's wrong. And one more wonderful thing, Mr. Mallapuram, I want to tell you is, as an employee, you have an option to choose between a new tax regime versus old tax regime on a yearly basis. This is very important to underline. Okay. If you are an employee, After a new tax regime,
Mm-hmm.
you have an option to switch to a old tax regime
Okay.
every year on a before the filing of the tax return. That is before the due date of the filing of the tax return.
Oh, so every time we can, you would say, last year, say I went with the old regime, and now I went with the new regime. Probably even in the future, I can again go back to the old regime. It's possible then.
This is only available to employees,
Oh, only employees. Okay.
salaried employees.
Acha. Business class people, they can't do that.
That I'll come there.
Okay.
That I'll come there.
Mhm.
As a salaried employee,
Mhm.
even if you are under a new tax regime over years, okay, you can still switch to a old regime or a
Okay.
new regime and choose between the two,
Okay.
depending upon which is more beneficial to you. I'll tell you perfect example.
Mhm.
My own friend,
Okay.
neighbor also in my community,
Okay.
then normally I'll do his tax filings and all. He give me form 16 and I'll file it. Okay.
Correct. Correct.
Just give me a form 16. He claimed it under old reason because he has housing loan and is all the deductions, medical, everything. Okay.
Correct.
When we started filing, he doesn't have any expectation because all the TDS has been deducted by the company and he just gave me for the filing purpose.
Okay.
When we are doing the filing, okay, then
Okay.
my team has come to me and said, sir, we are getting refund, sir, 36,000 refund. Okay.
Oh.
So because we have option, we have opted a new reason for him.
Okay.
But when he opted a old resign and submitted all the proofs to the company,
Okay.
okay, and but when he came for the filing, okay, we normally choose because see, we are as a tax professional, we want my client to be more taken advantage of it. So we compare both. Okay.
Okay. Okay.
So they came and tell me, sir, we are getting more benefit under new tax regime. Why he might have evaluated this because
Okay.
all employees now they are evaluating because of the social media or YouTube or because of the awareness they are evaluating. Why okay. Then I verified. So yes, he's getting.
Okay.
So
Uh,
I think it's very clear. If you have in your mind, there's a myth that saying that as an employee, I can only you have an option to choose between the new design versus old design.
okay.
It can be done
Mhm.
before the due date of the filing of the tax return. That is 31st.
So before due date, we can always switch as an employee between old and new. So we just do a calculation and see which is the best.
Correct.
Oh. Okay.
And there is a form that needs to be filed
Mm-hmm.
that will take care.
Oh. Okay. Okay.
Okay.
Fine, sir. We'll go for
Because
that. Yeah.
we normally observe Mr. Mallapuram, these employees, see, because they go to a tax practitioners or maybe a consultants, they say that we'll pay you 10% of the refund and no, we'll give you all that. And also, they will not properly guide them. So these people will
Oh.
go there and give the form 16 to them and they don't know all this. Okay, whether I can switch to a new regime or old regime, and they will also
Oh.
don't
So
tell them
go ahead and file it. That's it.
filing the form also to the department because you need to
Oh.
file a form. Okay.
Okay. Okay.
So what I recommend is to all the salaried employees who in this session, you
Mm-hmm.
have an option. So you wisely choose between the two. You go to a tax professional, okay, anyone, and you evaluate both and then take a decision. Okay.
So
And one
even
more myth that I want to clear, Mr.
yeah,
Malapur.
yeah. Sir, even we have seen in the organizations, there will be some people will be coming in, there's a bulk submission of all the ideas and things like that. So even when they are doing it, they should ask them like which is the best and then choose the right option for them. Give me this.
Correct.
Okay. Okay.
Correct.
Fine, sir. We'll go for that.
Okay, but yeah, and I think this is all for the salaried employee. Anything you ask about entrepreneurs, other business people, other than salaried employees.
Uh-huh.
But unfortunately, Mr. Mallapuram, the government, they have shown a discrimination between the salaried employees versus entrepreneur.
Oh
Okay.
my God. Okay.
What they did
So
is,
all the professionals also, like you and me.
including me, sir, including me.
Okay. So
See,
fine.
they said, okay, so because see one more thing, the default tax regime is new. If you don't opt anything, it's a new design.
Oh,
Okay.
okay.
This is the underlining point. If I
Uh-huh.
don't choose anything, it is a new tax regime. Is a
Okay.
default tax regime.
Okay. Okay. For anyone, like if I'm going ahead and filing myself or directly onto the site, then by
Yeah.
default we say new regime.
I know the most of the employees, their organization will ask them whether they want for a new or old. If they want
Oh,
old, give
yeah.
so it's there. So, but if I want, if it's a default regime is new,
Okay.
as an entrepreneur, I want to switch to old. The
Okay.
government is kind enough to allow me for one time.
Oh,
Okay, so this year I calculated my taxes and it's more beneficial for me under old tax regime. I can
okay.
go for one time and file that form 10IA.
Okay.
And happily filed and got the refund or benefit. Okay. Suppose
Okay.
next year, as a professional, I calculated and see this time new tax regime is beneficial to me. But
Okay.
Mallapuram, I lost the chance because
Oh,
as a professional, I have only have the option to switch for one time in my
okay.
lifetime.
Okay.
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 So the difference is the government is kind enough for the salaried employee to choose every year on a yearly basis between
Okay.
tax.
Okay. Okay.
But for a professional,
Mm-hmm.
only one time. When you are
Oh,
new, you can only go to old at one time, and again you cannot go come back. Okay.
okay.
But though I am saying it is very kind enough,
Mm-hmm.
these are the employees who pay more taxes. They don't have the much avenues to save taxes.
Okay.
Okay. Unless, as I mentioned, their salary structure is designed in such a way that they can claim most of the exemptions. Okay, but as a professional, me, you, and all, we can claim a lot of expenses
Okay. Okay.
and only pay on the net profit, right?
Okay.
So this is the difference between the salaried employee and entrepreneurs with regard to opting a new regime, whether it's old or tax. Okay.
Okay.
So just to
Let me just ask all the participants, like, if you understood this point, like, for employees, we can go every year. We need to choose. We have the option to choose whether we can go for a new regime or an old regime, and this is only for employees. If it is yes, you understood that. Can you say yes in the chat box? I request everyone to put a yes in the chat box, and I hope all the employees will be putting in. Oh, okay. There are a lot of people who are actually typing in. Thank you. Thanks a lot. See, this actually makes us a live because it's a live webinar, and we should be knowing, like, we are actually talking to the people. Okay, Ajay, you have raised your hand. I'll certainly give you Ajay Tyade. We'll certainly give you an option to talk to the our Mr. Srinivasulu garu by the end of this session. So until then, you have to hold a little bit. I've seen your raise of hand. Okay, and yes, sir. Sir, and for the business class people or the businessmen and the professions, it is only one time you can choose from the default regime of new to the old. Only once in the lifetime. If you understood this, can I see an yes in the chat box? Yes. Thank you. Thank you. Thanks a lot. Thanks a lot for actually being participating. Thank you, sir. We'll go to the next point now.
okay. So I think with this, and the fourth point is targeted audience, employee versus entrepreneur, because I think the participants has a mix of employees and entrepreneurs.
Yes.
We want to make sure this session is useful to them too. Okay, so we'll talk both their perspective. Okay, so with this background of okay, what is an exemption? What is a deduction? Okay, what is a new regime? Old regime? How do I get benefit of these? Okay, so now we will slowly get into the session, and now our focus is only on the investments. Okay,
Right.
I know at least majority of the people know about tax saving investments. So what I will do is I will make it more practical, more. No, I'll focus only on the those topics that are important and sensitive, so that the employees will gain more out of it.
Fantastic.
And as I see the second session, second slide is with regard to exemption and deduction. I'm just give you for the benefit of the participants what is an exemption and what is a deduction. Okay. So need not go in detail because we already discussed about an exemption and deduction. Okay. And this is with regard to old regime versus new regime. Okay. See, let me tell you, many of the participants and maybe my friends salary will come to me and ask me, so what is the best reason that I choose? Okay.
Okay.
Let me tell you, up to 7.75 lakhs
Okay.
salary,
Okay.
there won't be any tax under new tax regime
Oh, okay.
because there is a standard deduction of 75,000.
Okay.
There is a rebate available up to an employee drawing salary 7 lakhs.
Okay.
Okay.
Right.
So any employee in the range of 50,000 per month or 7.75 lakhs,
Okay.
more beneficial, like you don't have any taxes to pay under new regime.
Oh, okay.
And employees having more deductions like 1.5 lakh deduction and also
Right.
NPS, medical insurance, and I have properly structured exemptions.
Okay.
And I have interest on housing loan. Okay. So all deductions, exemptions, anything more than 3.5 lakhs, I can claim out of my total salary.
Mm-hmm.
Old regime is benefit. Okay.
Oh,
And I don't have much investments, much deductions, and it is only 1.5 lakh. It is old. It's better to go for the new regime. Okay.
okay.
So, but if you ask me, there is no proper. It depends upon each employee specific, depending upon the salary structure, their investments, their deductions, all that. So there is no fixed answer, yes or no, to this. It's all depends upon for specific employee. Okay, to choose whether it is beneficial to them. Okay, so as I mentioned, I think there is a gift at the end of the session. So maybe let's see whether that gift will answer this.
Oh, yeah. Oh, yeah. So I just take a pause upon here. These for all the participants, you stay till the end, and there's a gift which is planned by Mr. Srinivasulu garu, and all that gift will be given to the people who stay till the end. Okay, and I am definitely sure you will really like it. Okay, and coming back to the point here, what Mr. Srinivasulu garu is saying, sir, do you mean to say like people who have just joined an organization? Just started earning the money and doesn't have much great of investments and things like that. So to start with, probably a new regime is okay. And then probably once they start investing for the future, once you have the responsibilities coming onto the shoulder and you start investing for the future, and once you start investing, then probably we can shift to the old regime because they have the option to shift between the new and old. Do you think I'm right probably in saying this?
Correct. Even the deductions amount be at least in the range of 3 to 3.5 lakhs, including exemptions.
Yeah.
See, deductions you have only very 1.5 lakh and NPS 50,000, 2 lakhs.
Right.
There are other deductions that we'll like discuss now. But
Right.
Housing loan interest, okay.
Right.
All there, so altogether, if it is anything more than 3.5 lakhs, I think normally it is the old regime that is beneficial to an employee. Okay.
Excellent.
But again, as I said, it has to be specific to the each employee, and they need to evaluate on a yearly basis, which is more beneficial to them. They can approach their tax professional like me to understand better. Okay, and there are tools that are available. We'll see. We'll also discuss about those tools during the session.
Okay, fine, sir. We'll take it up. Yeah.
And then this slide is for the employees and entrepreneurs. Okay.
This is what we have been discussing.
With regard to the tax regime, okay. The option to switch, yes, no, yes, once in a lifetime, timelines, and very important, you need to file your tax returns before the due date of the tax return. Okay, so you should not miss out this. Okay, and there's a form that needs to be filed. If you don't file the form before the filing of the tax return, along with your tax return, then you will not.
Sir, can you just explain it a little more? Because I think 30th June is our filing date, right? Okay, so we to say this, what is the form to be filled? Like 10 IEA, the form need to be filed with the income tax department only before 30th of June. You mean to say that?
Correct.
Oh, we should first submit that and then the tax filing should be done.
Correct.
Or can we do it both together?
You can do both together.
Okay.
What is important is when I mean, because I'm switching from a default regime to old.
Mm-hmm.
Okay, this form is required to be filed at the time of switching from a new to old. New is
Okay.
right.
Mm-hmm.
So to claim this switch or to claim this old tax regime, I need to file this form.
Okay.
Without this form, we
Mm-hmm.
143.1 summary assessment, because see, once you file a tax return, your
Okay.
tax return will be processed by the tax department,
Okay.
calculating whatever the income that you computed is right or wrong from the income tax department, and
Okay.
calculate and give you, this is what tax that you calculated, this is tax as per income tax department.
Okay.
They, when
Okay.
they are doing that, they will not consider the old tax regime, they will consider the new tax regime.
Oh, because that's the default.
Default, and you do not file the form.
Ah,
We have seen the instances where,
okay.
knowingly or unknowingly, people knowing that it is the old tax regime that is more beneficial to them,
Right.
file the tax return, but they forgot to file the form.
Oh, now I'm actually able to connect. One of my client last year, he was saying he has actually taken all the investment proofs and everything from us, and we submitted all those. And then, but he was actually mentioning when he submitted, he didn't get the tax deducted the tax filing as per whatever he has given it to his consultant who just came to their office, like no, some bulk. No, everybody was just submitting, so they just did that. I think then probably he missed out in submitting this form then.
Correct, might be.
The reason then. Oh, okay.
Okay.
Uh,
And because we are talking about this form filing and all, I want to also clear one more thing that
mm-hmm.
suppose an employee forgot to submit any investment proofs that he made
Okay.
before 31st March to his company,
Correct.
organization, they can very well claim that deduction
Mm-hmm.
income tax return filing.
Okay.
Okay. Many think once I forget or once I miss out to submit these deductions or investment proofs,
Okay.
the organization, if it doesn't reflect in my form 16, I may not claim this in my income tax return filing.
Yeah, that's what we always feel like. If you don't submit it at your HR and it doesn't come up in your form 16, then for that year it is gone. We were actually thinking like that. Is it not?
Not like that, not like that.
Oh,
Really, organizations will seek these investment proofs maximum by end of February 28th.
correct. Because they need to process the next month's salary.
They have to verify and they have to validate and have
Correct.
to calculate. Suppose for whatever the reasons I did not make a decision and I made this on 15th March or 20th March or 31st March. By that time, I lost the chance to submit this to my organization.
Right.
You can very well declare this in your income tax return filing while doing it.
Oh,
Okay.
that's
So,
before June 30th.
I think Mr. Mallapuram, this is useful to you because
Correct.
often you go to the employees for the tax saving this one. They may say that they already submitted, they lost that time, but you can very well get this done before 31st March. Payment also should be done before 31st March.
Oh, yes. Okay. Okay.
This is also one of the
I think it's a valid point. Yeah. Yeah. Probably this is one of the myth which actually helped us to get cleared.
yes, true.
Yeah. Fine, sir. We'll
I
go for
think
it.
we are only talking about topics around the main topic.
Correct. We have not jumped into the main topic yet.
You see, that's what, as I mentioned at the end of the session, it's something that new that I need to take out of this session, at least.
Correct.
If
Correct.
at least 1, 2, 3 new things that I will
Oh,
learn.
yeah. I think if this is a question for all the participants here, for all the attendees over here. If you found that there is at least one value addition which you have received till now, okay, can you see a yes in the chat box? Can you see an yes in the chat box? Something which you never knew before, but probably you just got enlightened now. Oh yes, oh yes, oh yes. Thank you, thanks a lot. You guys are really great. You have been so consistent in actually responding, and that shows how good the session is going on. Sir, it's great, sir. We'll move further. Probably now into the main
Correct.
topic
We'll
of the
come,
sections.
we'll come to the main topic, and as I mentioned, even in the main topic, we will touch only the most critical, important aspects because see, somehow because we know all these instruments,
Mhm.
so we will touch important practical aspects of it. Okay.
Right.
So ATC, it is a popular section that
Yeah.
majority.
That's the main section. Probably everybody will be knowing about.
So, but unfortunately, over the period years, the government has not increased this limit. Okay,
Oh, yes.
we are expecting this from the government that to our Mata Nirmala Sitaraman, Finance Minister, to
Okay.
increase this limit, but unfortunately, no, it's not being addressed in our budget. And one more thing, Mr. Mallapuram, if you observe, the government unfortunately is discouraging the investments by introducing this default tax, no, new tax regime.
Sir, I even observed that, like, when the new regime come up, they said no tax saving, no benefits or things like that, like, no, but they have increased the limit. The first thing which actually came in my mind is, oh, what is this government doing? They are trying to, make people or discourage people in investing. Then I actually realized what is the real intent behind that. Probably they really want to invest properly for their future. Because tax is something, it is not just to save tax as a purpose for the future investments, but it is for the family goals and the financial goals of the responsibilities which the people have with their family. That should be the top priority rather than just saving the tax. If by doing that we are getting the tax benefits, still it is okay. But the main purpose for which we need to do the financial planning, because we love our family members and we have our responsibilities towards them. So probably I felt like, this is to detach the purpose of investment versus just to save tax. Probably I actually felt that.
Correct, correct. But that is not the real because in India, if you see, not many are about 10 lakhs or 9 lakhs salary package. So often you need to encourage savings and you have to at least make them push towards making certain investments for the future. But anyway, it's the policy decision of the government but one more, yeah, at least the government should consider increasing the limit because the cost has gone up like anything and inflation has gone up and 1.5 lakh is nothing because of the IT or pharma and other industry sectors, the salary is also increasing on a yearly basis and 1.5 lakh is nothing actually. And I hope the government should consider then it will be more beneficial to all the employees. So
Right.
now we will discuss on ATC for the 1.5 lakh limit. What are the instruments that I can invest?
Right.
So it is eligible as individual or HUF and maximum reduction 1.5 lakh. And you know, it's a life insurance premium.
Yes.
Okay, it's a tuition fee that you pay for children within India.
Right.
And I know majority will do Sukanya Samruddhi scheme for the women.
This is for the people who got the girl childs, the daughters at home. You have the additional facility to actually invest, and that's one of the very good one.
Correct. And Sukanya Samruddhi scheme, it's a locking for 18 years.
Mm-hmm.
And you cannot touch that investment before 18 years because the goal gets major. Okay.
Right.
And NSC certificates, okay, again 5 years, PPF again 7 years lock-in, and even 5 years matured FD. Okay, suppose you made an FD that has a maturity of 5 years, okay, and then units. And nowadays I've observed majority are doing investments into the mutual funds, stock market, IPOs. It's good to see the young people and all the business salaried people are investing in towards IPOs, shares. But again, this is only for the tax saving schemes. This 1.5 lakh is only for the tax saving plans, units. And
one thing I observed out of all the investments, especially in this particular section, there's always this lock-in period. You can't take away your entire money. Okay, probably like what's the reason behind that?
see, because they So, see, the government is giving a deduction with an
Mhm.
intention that you need to keep this for the future. The investment
Oh, okay.
for the future, right? So normally what we'll tend to, suppose I PPF, I made an investment for the purpose of the deduction. I put it in the money, and next year immediately I'll draw it.
Then there is the purpose is actually only to avoid the tax rather than just invest it for the future.
And any savings is for the future, your retirement, either as a pension or as a sum that you should get like as a gratuity
Right.
at the end of your retirement, at the end of
Correct.
attaining the age of the 60. So
Correct.
the whole purpose, so the government, if you see when they're giving any deductions,
Mhm.
they will put these conditions that you should not touch this particular investment for this period.
Right.
Okay, so majority of the ATC, there is a timeline. Okay, and I will just kept you the important. Okay, and even suppose if you bought a loan
Okay.
during that year, any stamp duty and registration charges that you pay for that particular house is also comes under this 1.5 lakh, and
Oh,
these
yes.
deductions are only for those paying tax under old tax regime. Okay,
Okay. Okay.
very clear. And this is very straightforward, and majority knows this. Okay,
Mhm. Mhm.
we'll get into the next slide,
Yeah.
and we will try to spend much time or material time on this particular section 80 CCD
Okay.
1, 2, and now just going to go to the next slide. So we have two slides with regard to 80 CCD
Okay.
and 80 CCD 1B. Okay.
Okay.
So as an employee under ATC, I have 1.5 lakh.
Okay. Yes.
We already discussed the instruments and
Correct.
put the 1.5 lakh.
Right.
As an employee, I can
Mhm.
also get an additional deduction of 50,000
Right.
if I voluntarily contribute to National Pension Scheme.
Oh, okay.
Okay.
Hmm.
There is an account that has to be opened by an
Hmm.
employee or entrepreneur
Right.
to get an additional deduction of 50,000. It's a national pension scheme.
Right.
And this is also, as I mentioned, it's a retirement benefit scheme.
Okay.
Once you make an investment into the scheme,
Okay.
okay, you cannot withdraw. I think now they changed the withdrawal rules. You
Oh,
cannot withdraw within 3 years from the rate of the contribution,
okay.
and the 25% of the amount can be withdrawn,
Okay.
and the two only for the specific purpose. Suppose you
Limitation can be only for
specific purpose.
limited. Okay. Okay.
The entire scheme is designed in such a way that they want this contribution, this fund is useful to the employee at the time of his retirement.
Right.
Even for an employee,
Mhm.
whatever that he contributed, he can only get 60% at the end
Okay.
age 60 as
Okay.
a bulk and remaining as an annuity. Okay.
Oh, okay. Okay. So
So,
there's a compulsory pension which they have to take.
say 40%.
Yeah,
So
40% is some. Oh, yeah.
employees can plan, entrepreneurs can plan, apart from the 1.5 lakh, another 50,000.
Oh, okay.
Total 2 lakhs.
Oh,
Generally, in our mind, it is only 1.5 lakh that I have to
correct.
claim. But this is the additional deduction that you claim.
Okay.
2 lakhs is a benefit. This is
Okay.
an employee discretion and he can do on his own, need not depend upon the employer. Okay.
Okay.
And
Okay.
we will go to another section, this before slide.
Okay.
Mallapuram, let me tell you, it's a wonderful section.
Okay.
Not many are aware of this,
Okay.
but has to be done through company, through organization. The management has to take a decision.
Oh, okay.
This is a corporate NPS.
Oh.
Okay.
Mm-hmm.
So under this, both employee and employer, like see, you have provident fund. You
Yeah.
employee contribution will be there, employer contribution will be there. Both will contribute to the provident fund.
Correct.
Similarly, under NPS,
Right.
CCD1, 80 CCD2,
Okay.
both employee contribution and employer. EE means employee,
Okay.
ER means employer. Okay.
Okay.
So this corporate NPS has to be implemented by the company or an organization
Okay.
by approaching to the near the bank or the respective service provider who will open an account for you, or like they will open a corporate NPS account for you and
Okay.
contribute on the company behalf. And
Okay.
the wonderful thing is, under new tax regime, you
Okay.
good for any of the deductions, right? I told you.
Right.
But this is only one section.
Okay.
Though you are under new tax regime,
Okay.
you can still claim deduction by opting to employer corporate NPS scheme.
Oh.
So, first thing, organization has to decide on this, implementing this corporate NPS. They open an account as an employee, I can contribute.
Okay.
And as an employer, they can contribute. And employer contribution, see, generally, it's a CTC concept, cost to
Right.
company
So
concept.
all this adds up to the CTC, right?
CTC. So, generally, even employer contribution means it's part of your salary.
Correct.
Not that
Correct.
the employer will contribute additionally and all. Okay.
Mhm.
So, out of your salary,
Hmm.
up to 14% of the basic salary
Oh.
can be contributed and can be claimed as a deduction even in a new tax regime.
Oh. So straight away then, if say suppose a person is earning say 50 lakh rupees, so 14% of that, if the salary structure, as you said, the organization level
Basic salary.
basic, it is only a part of basic salary.
See, generally, these majority of the organizations keep 40-50% as a basic salary.
Okay. Yes.
Example, suppose if you say it's 50 lakhs is my total salary
Right.
and 25 lakhs is my basic salary.
Basic. Right. Right.
On the 25 lakhs, 14% of the basic salary, that 14% of the 25 lakhs,
3.5 lakhs.
the maximum I can contribute to NPS, 14% of it can be claimed as a deduction, even under new tax regime.
Oh, sir, I'm a little bit confused over here. Sorry, I'm just stopping you in between. So is it a mandatory that both employer and employee should contribute, or either of them can only contribute, or only employee can contribute?
No, see, that's what I'm saying. Whether it is an employee contribution or an employer contribution.
Okay.
Now, because of the CTC concept, everything.
Oh, anyway, it's all same.
So whether you say it's an employer, see, the benefit is only when it is an employer contribution. Goes as an employer contribution because the left-hand side 80 CCD1 EE contribution, whatever that you do, that is
Right.
1.5 lakh.
Acha. Okay.
So
Okay. So this is apart from 1.5 lakh. If it is being deducted directly from the employer, then this goes as additional to that.
correct.
Oh.
So because in my flow chart, the left-hand side is employee.
Right.
So if you contribute to the corporate NPS as an employee, whatever that you make, part of 1.5.
Oh. Okay. Got it.
So there's no use much. But
Okay.
under corporate NPS scheme, as an employer,
Right.
employer can contribute, though it's a part of your CTC,
Okay.
claim 14% of your basic salary
Can be.
reduction under APCCD2.
Okay. Okay. Okay.
But under old tax regime, it is only 10%.
10%. Even deduction also by the employer.
10% of the basic salary.
Okay. Okay.
So again, I'll just repeat for the benefit of the participants.
Yeah.
The screen that we are seeing, the slide that we are seeing is for the corporate NPS.
Right.
So there are service providers.
Mm-hmm.
They help you out, assist you in opening a corporate NPS account. It can be a bank itself. So once you open a corporate NPS account, there is a PRAN, PRAN number will come.
Okay.
Under that, they will contribute it.
Okay.
The tax benefit is, as an employee on the left-hand side, if I contribute to this corporate NPS,
Right.
this amount is also part of 1.5 lakh limit.
Okay.
Okay.
Hmm.
So
Hmm.
there is no use here being an employee contributing to the corporate NPS, employer contribution.
Right.
Rather, we have to focus on 80CCD2, where we will tell employer to contribute to NPS. See, when I
Correct.
say to the employer contribute, it's not that employer is adding anything additional over and above your salary.
Hmm. Hmm.
Because it's out of the your salary CTC component, they will contribute as their contribution.
Okay. Got it.
Okay, but again, in this, the percentage varies between new tax regime and the old tax regime.
Okay.
It is 14% of the basic salary under new tax regime and 10% under old tax regime.
Oh, okay. Okay.
And this is one of the section out of 2 or 3 sections you can claim deduction even under new tax regime. That is a wonderful like.
That's the best part. Got it.
That's what I said in the beginning of the session.
Yep.
People think that because I am under new tax regime, I
I
won't get any deduction.
cannot claim.
And again, this is not something the employee has to decide.
Yeah.
Like I mentioned, how the salary structure and exemptions has to be planned by an organization or a management or HR. This also has to be implemented by the management, HR,
Correct.
HR
Correct.
reviews.
So it's a strategy what need to be prepared as an organization so that it will be helpful for all the because anyway for the organization it's a cost which they need to bear. But if it could be structured properly, then that could be a very big difference for all the employees.
So you still be under new tax regime, but you will get benefit out of this.
Okay. Okay. So if there are any HRs in the attendees right now, if you are looking for any kind of additional support, can we ask them to get in touch with you, Mr. Srinivasulu? Can they come and you can help them out? Srinivasulu, you can help them out, right? If they want, and yeah. Okay.
We are doing it. We are doing it for the because we create an awareness to our employee, like our clients, to them whether because it all depends upon the number of employees and the salary cost. Like each employee, like the salary cost. So if there are so many employees with the very very highly paid salaries, then
Yes.
when they choose, it's all depends. So any specific to the organization, if they require this, and we are happy to help them in implementing this.
Perfect.
Them out in the process.
I think this is a real big insight, like because most of us, I don't know, like now I'm actually listening this for the first time. If it is for the first time somebody has listened to this particular thing, can I see an first time or first in the chat box? Can you see all the participants who are actually listening to this for the first time? Oh yeah, I'm seeing even thumbs up coming up. Like thanks a lot. So there have been a value addition for all you guys till now, right? Okay. Can I also see an yes over there? Oh, great. So I think we are delivering but every minute that passing through this live webinar, we're able to pass on the real good value to all attendees. Great, sir. Let's proceed further.
Okay. Then we'll come to we'll just proceed to the other slides. Okay. And medical insurance premium, and I know majority knows, and
Yes.
nowadays many organizations are including this medical insurance premium as part of their CTC and giving this as a group health insurance and all, and they're deducting it from their salary and including it as a part of the salary and all. So and quickly, the limits are, if I'm an employee, not a senior citizen, because I'm not a senior citizen. So
yeah,
me, my spouse and a children,
right.
I can claim 25,000.
Okay.
Okay, maximum. Okay.
Right.
Though company gives me a medical insurance premium, I can still approach people like you and get an additional medical because nowadays medical cost has gone up and I want to take more coverage and I'll come to you and take an additional premium. So, but maximum is 25,000.
Okay.
And I have my parents. They are not, suppose if they are not senior citizens, I can claim another 25,000 for them.
Right.
So maximum I can claim 50,000.
Right.
For me, 25,000. Like for me, my spouse, my children, up to 2 children. So I can claim 25,000. And for my parents, other than citizens, I can claim another 25,000.
Right.
This is one scenario.
Right.
Maximum I can claim 50,000. Suppose
Right.
I don't have the medical insurance premium for the entire 50,000.
Okay.
But there is a preventive health checkup of up to 5,000 that you
Oh,
claim, irrespective of whether you have medical insurance premium or not, that
okay.
paid in cash and can still be claimed within that 25,000.
Okay.
Suppose,
Yep.
Mr. Mallapuram, I have an insurance premium of 15,000,
Right.
and for my parents another 15,000.
Right. 30.
Okay.
Right.
Okay. Because I have only 20,000, I can claim additional 5,000 under preventive health checkup.
Okay.
That can be paid in cash. But earlier medical insurance premium should be paid only through check, NEFT, or through bank.
Correct.
So one point that I want to clear is
Mm-hmm.
there is a preventive health check up to 5,000 paid in cash also can be claimed as a reduction. Suppose you are completing the limit of 25,000.
Okay. So preventive health checkup, and say I have my own health insurance of 25,000. So it is 25,000 plus 5,000. I can claim up to 30,000.
No. Limit is 25,000 only.
Okay, but this additional deduction of preventive health checkup of 5,000.
5,000 part of 25. Suppose your medical insurance premium you paid only 17,000, say.
Okay.
It's 5,022, well within 25,000.
Oh, okay. Acha, even if you have not exhausted, only then it is applicable.
Correct. Because
Ah,
mostly not everyone will pay 30,000, 40,000. People may pay only 10,000, 12,000, 15,000 depending upon their medical insurance. Can still use the 5,000 from this prevent health checkup option.
Okay.
This I want to clear. So option one is myself 25,000, my parents 25,000, maximum 50.
50. Right.
Second option, have 25,000.
Right.
Senior citizens are there. My parents are senior citizens.
Okay.
I can claim 50,000 for them.
Oh, so it is 25 plus 50.
75,000.
Both together we can. Okay. So it is 75,000 what we can do.
Correct.
Okay. If it is only parents, it is 25. Okay. If senior parents more than 60 years, then it is 50,000 rupees what we can claim.
Correct. So 25 plus 50, 75.
Okay.
Suppose I have not taken insurance for my parents, senior citizens.
Right.
But wonderful thing, again underline, you can claim medical expenditure paid through bank, a reduction up to 50,000.
Oh. Okay.
This part people think only I can claim only when there is a medical insurance claim for my parents. Not required. For you, you should have a medical insurance policy up to 25,000 because if you are other than a senior citizen.
Okay.
For your parents who are senior citizens, suppose if they don't have medical insurance premium, you can claim medical expenditure up to 50,000 subject to that payment is made through bank.
Oh, it's an online payment, like check or online payment or anything.
So, generally the department will not submit anything during tax submission, but if they ask anything, we need to have
We need to have the proof with us. Yes.
So, second option, me, other than a senior citizen employee, with a senior citizen, I can claim 75,000. If senior citizen, like if parents are senior citizens and they don't have the medical insurance premium, they can claim even medical expenditure up to 50,000.
Oh, okay.
Okay.
Sir, but say suppose the senior citizen parents are there. Okay, I have actually claimed up to my 25,000, and my senior citizen parents are there, for whom because of their present health conditions, there is no policy which I can take on the health insurance front. So in that case, if I spend on their regular medical expenditure like the diagnostic test or medicines and other things, if I club all those things together, still I can claim this 50,000.
That's what I'm saying. That is what I'm saying. Underline this.
Sir, I'd say suppose I also have an health insurance plan for my senior citizen parents, wherein I actually paid only 30,000 rupees as my premium. So the remaining 20,000 is still left. Can I claim these expenses?
No.
Oh.
See, because by the senior citizens, medical insurance premium is very high.
Yes, it is.
60,000.
Yes.
So it's very high. So normally, yeah, I understand from where you are coming. If suppose pay only medical insurance premium 40,000, but expenditure is 50,000, why anybody will go for the premium?
Yes.
But this is what the legal provision that they have given.
Okay.
So
Okay.
25,000 plus 50,000, 75,000 maximum you can claim.
Okay.
I'll come to the option 3, where
Yeah.
I'm a senior citizen employee,
Right.
so I can claim 50,000.
Okay.
My parents, if they are alive,
Oh, okay.
claim another 50,000. So maximum 1 lakh.
Oh, in that case, then it becomes 1 lakh.
1 lakh. And
Ah.
preventive health checkup is same in all the 3 options. 5,000 you can claim. You can no add up.
Okay. 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 Got it.
Okay.
But I think you gave a lot of clarity on this. Probably like the people wherein like you can't have your parental health insurance policy in place. If there is any scenario like that, the expenditure which we might get incurred for their medical expenses could be diagnostic, could be in medical expenses paid through your account. That means it should be a proper accounted payment, then only you can claim up to 50,000 rupees. I think this is a good one. If you felt this, you have the clarity in this, can I see a yes in the chat box? If you all got a clarity on this, can you say yes in the chat box? Oh, great, great. Thank you, thanks a lot. Yeah, sir. Yeah, we'll go to the next.
I think I just saw that time. It's already 2 o'clock we crossed. I
Oh
think.
my God. Oh shit.
Oh.
Guys, is it okay if we could just continue, because Mr. Srinivasulu is taking time in actually giving us a full clarity, and that's the main theme of this particular program. Like now in Widmore from Mallapuram, to provide clarity such that you will have confidence in whatever the decisions that you can take. Okay, so if it is okay for you, can we continue probably for another how much time, sir? 15-20 minutes?
We'll try, see, I will touch again important points. Next
Yeah.
15 minutes. Queries, we'll try to answer 2 to 3.
Yeah.
If you can get the more number of queries through Word document.
Then we'll do one thing. I'll also keep myself a little bit mute. Okay, you just carry on with your sections a little faster, so that people will have the clarity. Then we'll take up the question and answer sessions.
Correct. So,
okay, guys, is it okay? Can we continue further, because it's already 2? If it is yes, can you say yes in the chat box? Oh yes, we got the approval. I think, sir, let's continue.
Okay, so we will touch base another 3 sections, important section.
Right.
180 DD, DDB, 80U. Okay, this is with the persons with disability.
Okay.
Persons suffering with a specified disease.
Okay.
The slide that you are looking is the 80 DD.
Okay.
It is for a dependent with a disability.
Disability. Okay. Could be brother, sister, anyone. Yeah.
Yeah. It can be, yeah, dependent. Yes, correct. You are right. It can be, no, spouse, children, sister, brother, mother, parent will come.
Right.
And what is a disability? The list of diseases were given in the Excel sheet. Okay. Now, okay, that is self-explanatory that you can go through.
Okay.
The disability percentage, we have to evaluate whether it is more than 40%, less than 80%, fixed reduction of 75,000. And if it's severe disability, it is 1,25,000.
Oh, based on the disability that is given. Okay.
Fixed. Whether you spend, doesn't spend, you will get 1,25,000 if it is a severe disability, and it is a normal disability, 75,000. And there is a form that needs to be filed, Form 10 IA. Okay. By attaching the certificate from a medical authority. Okay. Okay. Fine. This is important, and tell you over a period it has been misutilized. Right. Claimed it, even there is no actual disability of the dependent and all. But you know, the government has plugged the loophole by bringing a form and also seeking a certificate from the medical authority, ask them to file it with this form. Okay. Oh, okay. Okay. Most important thing is whether you spend, doesn't spend, you will get 75,000, 1,25,000 depending upon the disability. And in the certificate issued by the medical authority, they will write whether it's a normal disability or a severe disability. And what is the disability has been defined under list of diseases. Okay. Okay. So we'll quickly get to the 80 DDB. Okay. Okay. DDE, right? DDB, and this is not a disability, it is a disease.
Okay.
They give certain specified diseases wherein it says, again, when you are suffering with specified diseases, again, it includes even you, spouse, children, mother, parent, sister, all that.
Right.
And here it's not a fixed deduction. You need to
Mhm.
spend on the particular disease. And this is the deduction is limited to the actual spent. So
Okay.
only 50,000. Okay, again, senior citizens are 1 lakh and others are 40,000.
Okay.
Suppose
Okay.
if there are others other than senior citizen and you spend 20,000, it's only 20,000. 10,000, 10,000. If it is 50,000, only 40,000.
Okay. So 40,000 is the cap.
It is 1 lakh. It's an
Mhm.
actual amount or 1 lakh, whichever is lower. So,
Mhm.
80DD, we are talking about a dependent disability. Disability is something from the birth, or it may come during, so for whatever the reason.
Right.
This is a specific disease that you are suffering.
Okay.
Both disability is different. So I have blindness. I have a
Right.
mental illness. These are disabilities. But disease is something, a cancer. Okay,
Right.
neurological diseases. So those are defined in the list.
Okay. Okay.
If it's a disease, come under this. If it's
Mhm.
disability, you go there under 80D.
Okay.
There, irrespective of whether you spent or not, you will get the fixed deduction. Here, only the actual spend will come.
Oh, great.
There is a section called 80U.
Okay.
Okay. There, Raghav, can you go quickly to the 80U? Okay. Here, 80DD is for the dependent.
Right.
80U is for you.
Oh, disabled individuals. Okay.
So 80DD and 80U, 80D
Hmm.
is for those dependent disability, 80U is for your self disability.
And this is available for both new regime and old regime?
No. Deductions, we are only talking about the
Old regime.
old regime. And
Okay.
these three sections are only for the resident individuals, not for
Oh, okay. Okay. Got it.
80DD and 80U. When you compare both, this is for dependent disability, this is for self disability. Here
Okay.
also you need to measure what is the disability percentage, whether it is
Right.
40 or 80.
Right.
But there it is more than 40, here more than or equal to 40.
Right.
Also fixed, here also fixed. Here also we need to get the certificate from the doctor, certificate from the doctor.
Doctor certificate
They
is-
have to file a form, file a form.
Yes.
Only
Yes.
thing is, this is self disability, it is a dependent disability.
Correct. Correct.
Got it?
Got it, sir.
80DDB, it's a specified diseases, it's not fixed amount, it is only actual amount you spent.
Right.
So these three, I think I understood the differences,
Yes.
right?
Yes, sir.
And we will go to the other deductions, and I will spend on the interest paid on housing loan, housing like
Something is
education.
really required.
Okay. This is very, very important because often middle class people will take loans,
Right.
educational loans for their higher studies. Okay. So for them, any interest paid on this educational loan can be claimed as a deduction up to 8 assessment years.
Oh.
So I'll just spend 1 minute here. Loan should be taken from a bank or a financial institution. There is one other condition.
Okay.
Should be for higher studies, means
Okay.
this is for graduation or post graduation. See, when you go and see the section is not clear whether if I go abroad and take education loan,
Okay.
I still claim the interest on it. But there are cases wherein it says that higher studies includes even the payment made outside India. So,
Oh, okay.
if you are going abroad, doing some MS, so graduation, post-graduation course, you have taken a education loan and paying interest, yes, you can claim 100% of the interest up to 8 assessment years.
Oh,
It can be
okay.
for you, for your spouse, for your children.
Okay. Anybody in the family?
Anybody in the family. Family, like again, me, wife, children.
Dependent family members.
Yeah, okay. And it should be on a payment basis. So interest will be paid. Sometimes people may not pay interest for whatever the reason. So they say
It's not. Okay.
pay interest.
The outflow should be there.
So interest on education loan is something very, very important deduction that you can claim up to 8 assessment years, and loan should be for the higher studies purpose. It can be in India or outside India.
Okay.
It should be for
Okay.
you, for the person, for the children. Okay. Very important. I think something often people will ignore it, but education loan, if you are planning, you can take, and this is over and above that 1.5 lakh and 80.
Right.
So independent section, it is not linked to any other limits. you can claim 100% of the interest paid on education loan for
Right.
8 assessment years.
Okay.
Okay. I'll go to the last column, interest paid on electrical vehicle loan.
Yeah, this I was just about to ask. Yeah.
Okay. But again, the scheme is not available now to plan.
Oh,
Because the loan should have been sanctioned between 1st April 2019 to 31st March 23.
okay. 2 years back.
You
Okay.
should have take an electrical vehicle,
Okay.
okay, and you should have taken a loan.
Okay.
On that loan, what is the interest that you're paying, maximum 1.5 lakh, you can claim deduction.
Oh,
So, because go green
initiative.
initiatives of the government,
Mhm.
government has given this deduction to those who bought vehicle,
Okay.
availed a loan between the period that I mentioned,
Okay.
2019 to 23,
Okay.
and paid interest on the car loan taken. That interest that already paid is exempted, like deductible from your salary income. And now this is not available. Suppose if you want to go now and buy a electrical,
Oh,
it's not there. Suppose earlier you bought, but you don't know, you can still go for it.
okay. Okay. Okay.
But
And this is valid. Yeah.
we are making representations to the government to also give additional for the subsequent years
Right.
to encourage the electric vehicle. Let's see. Okay.
Yeah.
Then I'll come to the second and third column. Okay, this is for for the individuals or the taxpayers to encourage to buy residential property, and this is also not available now. These are only for that particular specific period, like how we discussed electrical vehicle. For the interest on loan taken for residential property, this is loan should have been sanctioned between 2016 to 17, and
Okay.
loan should not exceed 35 lakhs, and value of the residential property should not be more than 50 lakhs, and I should not own more than residential. So mostly I don't think this will be applicable, useful to many of the participants, because it's the particular term benefit has been over. Okay.
Yeah.
And even 80 also same thing. It is also for 19 to 22. And the loan, the property value should not be more than 45 lakhs. And they should
Right.
not own more than one house property, maximum 1.5 lakh. And this is over and above that 2 lakhs that we claim under house property.
Oh, okay.
Because there is a income from house property, loss from house property that we will claim under section 24
Okay.
as a law. Okay.
Okay.
Over and above this, there if you are not able to claim 2 lakhs, you have to come and claim here.
Oh, okay. Okay.
Okay. So yeah, I think this may not be useful for many of you because the period has already been lapsed.
Okay.
So we'll quickly come to donations, and I think this is something majority of you.
Yeah.
Suppose if you pay to TTD, Tirumala Tirupati Devasthanam, and you want to claim donation, okay, so you can donate and you claim this as a 100% or 50%. And one very important thing is you need to obtain a certificate in Form 10BE. This is very important. Earlier, this is something loosely where you will take a donation receipt.
Right.
There they'll give you ADG section, all that.
Right.
But there is no control to the government on this. Now they say this, I don't need donation receipt. Ask the donee,
Okay.
submit this in a form and get a certificate. Like how you are getting Form 26, like Form 16, all that, you need to get a certificate of deduction 10BE.
Oh,
It's
that's
very important. You all make donations, but to claim the reduction, I need Form 10BE.
okay. Yeah. This when I actually did it, they are actually asking, do you want to claim? And then they say, now you apply for that. The 80G.
Correct. 10BE is very important. Okay. And this is this section is for those individuals not claiming HRA.
Okay.
You can still claim. No, again, this is for the not available for the new tax regime, the old tax regime, where you're not claiming HRA. Like entrepreneurs mostly, where they cannot claim HRA, they can claim this. And there are limits like 5,000 per month or actual rent paid minus 10% of the total income or 25%. So there are certain limits under which you can claim. So
Okay.
only thing that you need to keep in mind is, as an entrepreneur, I'm staying in a rental house, but I cannot HRA, I cannot get HRA because I'm not an employee.
Right.
I can get deduction under this particular section. This is very,
Oh.
but otherwise,
5,000 per month.
most of the employees who are on rent, right,
Right.
claiming HRA, okay, they will get benefited. This is only for those entrepreneurs not claiming HRA. They can claim under this within the limit 5,000 per month or actual rent payment 10% of the total income, 25% of the gross total income. Okay.
Okay.
And this is not much of use, but like how donations you are doing, you can also donate to a
R&D.
such organizations, and you will get 100% of the amount as deduction. Here also you need to get the Form 10BA certificate from them to claim the deduction. Okay.
Okay. Okay.
And then we'll go to the donations to political parties. I think this is also something people are individuals. You can contribute to the political parties and electoral trust.
Okay.
And yeah, but unfortunately there is no certificate or nothing is required. Yeah, so you only thing is you should not pay in cash. You pay to the bank. And
Should be an account payment.
because
Okay.
those are only for us, not for the political parties. So
Yes.
we're not expecting you to file any donations list so that you will not get any certificate.
Oh yes. Oh yes.
So this is for those who contribute to the political parties.
Right.
And next, this is for those individuals. Okay, so basically others. So maybe like maybe you are an employee and you're still ordering some books and all, and you are getting some royalty income.
For royalty income.
And those royalty up to 3 lakhs is exempted. And again, they will issue, and you can get a locally that income or outside foreign income. Okay, depending upon that, you need to get a 10CCD or 10H certificate from the person paying you the royalty and claim that as a deduction. Okay. And this is something important, savings, because we all have savings account interest or FD interest.
Right.
For an individual, up to 10,000 on savings account, you can claim deduction.
Okay.
But if you are senior citizen, apart from the savings account, on FD interest also, you can claim up to 50,000.
Oh, okay. That's for the senior citizen.
Taxpayer, savings account interest.
Okay.
Okay, I can claim deduction.
Done.
Senior citizen, whether it is a savings account interest or FD interest, up to 50,000 they can claim. And I want to tell you, Mr. Mallapuram,
right.
I think how government will know about my savings account interest. But let me tell you, because of AIS and TIS, Annual Information System and Taxpayer Information System.
Okay.
You may forget about your mutual fund sales, you may forget about your security sales shares, you may forget about your bank accounts, savings accounts, FD, everything. You may also don't know that you have this bank account, but with that AIS and TIS that can be downloaded from your income tax login, department has a full history of the transactions that you do in a year.
Oh, okay.
So your bank cannot give you the savings account interest, but you may have the savings account interest in the AIS that got reflected, which got from the bank to the income tax department. So it's very important that being a taxpayer, filing your tax return, you should know what is Form 26 AS, what is AIS, what is TIS, what are all the incomes that got reflected in my AIS and TIS, whether those are relating to me or not. If they are not relating to me, then how do I respond it through my portal that these are not, sometimes what happens because of the wrong PAN or for whatever the reason, okay, we have seen the instances where suppose I represent on behalf of somebody for the registration of a house at the SRO office. They may ask me my KYC, I'll give to them.
Right.
Absolutely, my PAN, in my PAN also that sales will get reflected.
Oh.
Instead of the actual person who sold it. Okay, so that point of time, it is important that you need to respond in your AIS that is not related to you, it's related to somebody. Who is that somebody who that PAN number you have to give.
Nowadays I'm seeing a lot of online portals wherein we can just apply, just pay little fees, or somebody they can go directly to the website of the income tax department and they apply. If they falter on any of these things, what will be the repercussions on that?
What? Sorry, Mallapuram, I just missed out.
If because somebody is doing on, say, suppose I'm going by myself, and then I'm filing my return by myself on the portal without anybody's help. Okay. and or I'm actually going to any of the online support systems these days we have, when we are actually putting in the details and they are filing the tax on behalf of us instead of any manual intervention in between. So in those situations, if we just missed out on any of these things, what you said, the annual AIS and TIS and 26A, like if we just miss out on that in giving the information correctly, will there be any repercussions from the income tax department?
Correct, correct. See, while filing your tax return, you may not know that you already missed out actually. Okay.
Okay.
Because as a taxpayer, you may not aware of all these AS, TAs and all.
Correct.
You often doesn't even look into whether that has been properly updated. I'll tell you one instance wherein there's an FT for my client. The
Okay.
FT got reflected only for 3 quarters. 4th quarter FD has not been reflected.
Oh.
My client is not aware of that. He did not verified anything. So he just simply went into the portal and imported all the data and filed, because he is a honest taxpayer. He filed well before the due date of the tax return. That is, which is 31st July. He filed it only in 15th June. By the this FD interest has not been reflected. He filed it. Then later he got a 143(1) intimation saying that there's a difference in the income between you file and between the income tax portal. Then he came to me and asked what happened. I filed everything on time and everything.
Okay.
Then he realized that while filing his tax return, the bank has not reflected the 4th quarter interest.
Oh.
So what is more important is, as a taxpayer, okay, if you are doing on your own, very well good, but you should know that you need to also verify your AIS and TAS, whether it is properly updated or not, whether that is related to you or not. Oh. And then only file it.
So it's always better to have a kind of a support system in place. Correct.
See, maybe it's a learning curve. First year I did it.
It's a learning curve. Yeah.
You learn. Okay. Third year, it's because it's over period experience. And while doing, you don't know, but once you get the income tax notice or the intimation saying that there's a difference, then come to me and I'll file a revised return for them. And again, this revision in the return has to be done on or before 31st December of that year. So July is the original return and 31st December is the revised return. Okay. So we see if you really have knowledge and want to do on your own, you can do it. But as a professional, what we will tell you is just please check whether your AS, TAS has been properly updated and those are related to you or not. And in case if you require to choose between old tax and new tax regime, okay, file a proper forms, and that benefit and all. So all this has to be taken care while filing the tax return. And yeah, that's it. And yeah, so I think ATU already discussed in the last slide.
Oh, yes, you told about that. Yes.
Yeah, I think
when we are discussing about ATDD, DDB, and ATU.
ATU, okay. Yeah. And yeah, I think now we can quickly take some questions in case.
Yeah. Can I see? I think there was one participant, Mr. Ajay. Can you see a raise of hand, Ajay? 1 second. Let me just come over here. Yeah, Ajay. Ajay, I'm just allowing you to talk to our Mr. Srinivasulu garu. Ajay, you can talk now. You can unmute and then talk.
Yes, sir. Can I opt for the Sukanya Samriddhi Yojana, or should I opt for ELSS scheme? Because in long term, I see the benefit in ELSS as compared to Sukanya Samriddhi Yojana.
Yeah, Ajay, see, actually the purpose of this session is not to explain about the benefit of the scheme, but ELSS is market driven, okay, because depending upon the type of the scheme that you choose, whether it is an equity, debt or equity versus debt, the mix of it, the scheme that you choose define you and you will get definitely the more benefit when compared to the Sukanya Samriddhi scheme, okay. So it all depends upon the scheme that you choose and how it is going to perform over a period of time, or a longer period of time. Okay.
Sure, sir.
Yeah. So now I think Mr. Neeraj. Neeraj, you can talk now. You can unmute and talk.
Yeah, thank you, Mallapuram. I had a question regarding the investment submission only. So what happened, like I joined Atyeti recently, last month only. I had initially in my last organization, I selected as a old tax regime, but during my uh, ending days, I was unable to share my investment proofs to the previous employer. And
Oh,
now here again, it is a new tax regime, which is by default got selected. So as I heard that I can provide those investment proof during my ITR filing. So is it the correct understanding? And also, will I get the benefit of that according to my investments?
You are right, Neeraj. You will get the benefit, but did you join in any other organization?
Yeah. So I joined in Atyeti here last month
okay.
Okay,
only,
Neeraj.
and before that till December I
Hmm.
was working in the persistent. So during that tenure, I selected as yeah, during the initial estimated tax declaration, I selected old tax regime. But as I did
Mhm.
not submitted my investment proofs, it got converted into new tax regime, right? So when I'll be filing ITR, so I'll be able to submit my declaration, whatever the investment proof I have with respect to the one which I should have declared during
Neeraj,
this
what?
tenure, right?
Yeah,
Yeah.
I got your answer. Yes, you can very well choose the scheme, like resign that you want to do it. But I want to add one more important point. What Mr. Neeraj has raised here. This is for all the participants who join here.
Mhm.
It is, sometimes happens, Mr. Mallapuram, employee will change their company and they will get the two Form 16s in a year.
Right.
And they will not submit the income details of the previous employment to the new
Okay.
company. The
Okay.
new company will also take basic exemption of 2.5 lakhs.
Hmm.
Calculate tax only over and above 2.5 lakhs. But as an employee, you need to claim club both Form 16s and have to file your tax return.
Okay.
So
Mhm.
what happens? One thing that employees that they should do is when they join a new company, they should
Mhm.
give the income details of the previous employment and deductions or whatever that they already submitted to the new employer. The new employer will include all that he needs the income details and then give a form 16.
Okay.
But many times that we observe that they forget to give this previous employer details to the new employer.
Okay.
Even the new employer don't know they will give the basic exemption of 2.5 lakh
Correct.
and they will end up in getting the basic exemption of 2.5 lakh twice. But while filing the tax return, the system will accept only one basic exemption of 2.5 lakh and they have
Okay.
to pay taxes of 75,000 straight away if it is under more than that. If
Okay.
they 30% tax bracket. So what I want to bring to the kind attention of all the participants. Suppose you are changing the employment during the year,
Right.
you have two Form 16s, better
Right.
inform to current employer of about your previous employer income details and make them to include that in your current employer Form 16
Right.
to avoid and don't get the basic exemption twice.
Right. Okay.
So that,
Okay.
no, see, they're paying 1 lakh or more than 1 lakh or whatever the tax
Right.
during the tax season is painful because getting
Hmm.
deducted on a monthly basis as a TDS, no pain because I'm prepared for it and my cash flow is also planned like that.
Right.
When you are paying tax at the time of filing return because of this reason, you
Right.
are not anticipated that. It's real painful. So two Form 16s always better plan. Don't get two basic exemption limits twice. Okay.
Oh, got it. So, I think there are a few more questions which are actually still coming up, but probably this is the time to actually give the gift which we actually planned. Okay, guys, are you really waiting for the gift? Can I, we will also take up the questions. Probably you can, there is a way of how we will be also doing it. Uh, and the gift which Mr. Srinivasulu and his team has actually planned is you can actually check your own taxes. You can actually check through your calculations and see whether it is your new regime is good for you or the old regime is good for you. Okay, and to get this particular thing, see what we are actually doing is we are actually giving you how do I actually send this? Like, yeah, Dropbox, no. 1 second. See, we are actually putting a link in the chat box. Okay, and probably I can even share the QR scan code here, right? And then share. Hope you are actually seeing the QR code on your screen, right? I'm also increasing it a little more further. Okay, so the purpose of this session is to provide clarity such that you will have confidence in whatever the decisions that you have to take for yourself. Okay, so this you register yourself on this particular Google form link. The first thing is you'll be getting an email within next 24 hours with the free gift of that calculator given to you all. Okay, number one. And second thing, you provide your best time. You can choose your best time. We'll try to give you an appointment with Mr. Srinivasulu and his team, who can actually help you out with your the basic queries. If there is anything more that you need a support from he and his team, then probably we can actually book his appointment according to their schedule. So you will be receiving a call from all of us, whoever is actually getting registered on this particular Google form link. Okay, and so that you will get the free gift and also the appointment with his team to discuss a little further about the basics. Okay, I'm just trying to figure out where is this chat. Guys, you are able to see through question and answers. Yep, I think.
Mallapuram, my only request, only 3 questions. Any
Yeah.
3 questions? Because I have another meeting that I have to rush.
Oh, yeah. Yes, sir. Sir, I'm actually putting it in the chat box so that people can host and panelists. Yes, all send to chat, everyone. Yeah, I'm just doing it. I don't know. I'm not getting the send button here. Where is this? Save chat.
So, do you have this in a Word document or in a chat box?
I'm actually pasting in the chat the form, the link. I don't know, like I'm just trying.
Can I see the queries in the chat box?
Yeah,
Hmm.
I think you can see the queries. Like
1 minute. Let me.
yeah, you are able to see the on the more button. You can see the queries.
Yeah, 1 minute.
Yeah.
Go to the top. Queries. Yeah. Chat box. Chat.
You're able to see, sir?
Okay. But there is no specific query, Mr. Yes.
Hargopal, funding for your HUF is not an investment or deduction. Hence, HUF is separately entity before. I think there's an answer which is already been given. To everyone. If people are able to get the chat, I don't know why I'm unable to. No problem. I'll do one thing. I'll send across the link to all the registered participants. We have your email and mobile number. We'll try sending you by email the link to fix up this particular. We'll send even this QR code link and also the link for the appointment. Probably that should take care. So we'll send it to everyone who actually got registered.
Can you do a favor? Can one of your team member can sort out
We will sort.
queries?
Yeah.
In a Word document. So
Certainly.
filter, because there may be some common queries across
Right.
participants. So what we will do is we will filter and try to give you the answers. Okay, so that you
Right.
can publish it to all the participants. This
Sure.
an additional gift that you can give it to them.
Definitely, sir. Definitely, sir. Okay. So with that, like we come to the end of the session, and let me just like thank Mr. Srinivasulu Garu for actually for allowing us here your time to come down to all our participants here, and this is the session wherein it is called as Get More from Mallapuram, wherein the purpose is only to provide clarity so that people will have confidence. Okay, and even if you want to check your existing investments are in line with your future requirements, you can also have a review with our team. So in the form what we are going to get it, you can actually take what are the things that you want to discuss further. Any queries which you want to also ask, like you can discuss with my team. Probably within next 24 hours, you will receive a call. You will receive a mail, and also probably we'll also see we could just push it through WhatsApp, right? With that, thanks a lot. Thanks a lot, Srinivas Garu, for helping us out with
Just
all
give
your
me,
information.
just give me 30 seconds. I want to thank you, Mallapuram, for all the arrangements that he made to make this session happen. So thank you very much. Second thing, I want to thank my team member, Mr. Nagaraju, who helped me all the way in making this presentation ready. And finally, all the participants who patiently are there in this session to listen to this topic. And my office address and my email ID and mobile number are available on the slide that has been shared to you.
Yes.
If you have any specific queries, you can reach out to me directly, or you can also reach out to Mr. Mallapuram. And we are very happy to help you and guide you in the process. Okay, and if any of the participants have, or the owners or the entrepreneurs or the HR and all, like as I mentioned, if we need to help you out in the structuring the salaries and also
Right. There have been few queries which has actually come up, sir.
yeah, we're ready to help you out. That's it from my side. Thank you. Okay.
Oh, thank you. Thanks a lot, guys, and thanks for being so patient. We will sometimes the technology works and it doesn't work. That's okay. We'll send across the links and everything to everyone who got registered for this event. Okay. So thanks a lot. Thanks a lot.